Hello, investors. It is Connor Bates, Associate Portfolio Manager with Revere Asset Management. Today is Tuesday, August 13th, 4:47 p.m. Eastern Time, coming to you from Fort Lauderdale, Florida, with tonight's Revere Roundup Daily Market Insight video. Market state. So obviously, it was a correction. Could be coming off. We're starting to rally into the 50 days right above, but seeing a lot of positive action. So this could be neutral to positive soon. And if we look at the trend gauge, market leaders still red arrow, but we're adding that yellow sub arrow as some positive feedback across new buys in-house, along with a lot of names reclaiming key levels. Short term, we finally got this arrow back green. The S&P, the QQQ, the Dow, IWM, all reclaiming the 21 EMA, which is a great sign. Medium term, red arrow there, slightly above, so could get back above tomorrow. The Dow Jones is above as well. And then long term, this is our 200-day moving average, still have the green arrow there. So what happened today? Well, the S&P and the QQQ notched a follow through day. And now what? And I'll get more into that as we head into the video. But here are the final numbers. 21 over 21 list up 1%, 15 green, 2 neutral, 4 red. Big 8 leading the way today up 2.81%. RG8 up 1.71. S&P up 1.69. Equal weight 1.13. QQQ up 2.48%. Equal weight up 1.91. Dow Jones 1.01%. Mid caps 1.4. Russell 2000 1.54, 60/40 1.03, and in-house GROTECTION up 0.77%. So let's get into inter-asset correlation. A lot happened today, so it should be a fun video. So so we got that follow through day, and basically volume was greater than yesterday, and we were up 1.68%, closing high of the day. So we had PPI this morning. It came in cool, and we gapped up off the open, pulled back into this 53.78 level, and just had a strong trend all day, consistent buying and volume throughout the day. And this is going to be, this is day 6 off the lows into this 50-day. So that's going to be the next key level to watch out for. Pull up the 60-minute and kind of took out this bear gap off the open that I mentioned on last night's video, and seeing this fall through. And obviously I mentioned some of the wedging pattern yesterday, but the key thing was that from foul moves come fast moves. So we had that invalidation of that, whatever you want to call it, bear flag wedge, and we got volume confirmation. So overall, a really strong day from the S&P. And now it's finally trying to just 0.5% below that 10-week, and that's a key level, and it coincides roughly with the 50-day. So overall, all in all, good action. And some levels above, obviously 5,500. This is a key psychological level, and then over that 55.50 and so on, just taking it level by level. QQQ again, even stronger today, notching the follow through day up 2.48%. Volume stronger than yesterday, and this RS line starting to hook back up. It outperformed today, and this one had the biggest pullback, so it could have the sharpest rally back up. Sometimes that's the case, and this also reclaimed the 21 as well today, so that's positive to see. If we look at the weekly, it's reclaiming that 21 week as well, so good action there. Dow Jones invalidated this wedge again as well, and closing back above the 50-day, strong today. Mid caps coming right back into this 50-day, along with this 21 that's just slightly above. Russell 2000 breaking out of this mini consolidation up into the 50-day. And if we zoom out to the weekly, a lot of people after this, you call it failed breakout, were saying, small caps are dead, but it's not looking like the case. It had a strong breakout on volume. Now it's pulling back to the top of the base. So most pullbacks pull back to the breakout area, although sometimes you wouldn't like them to. A lot of the times they do. And so getting back above this level, and resuming trend would be good for breadth and small caps. VIX just getting crushed today, again, down 10%, and hard to believe this was over 60 just last week and now down over 40 points, closing the day below 20 at $18.12. And this is what we've been wanting to see the VIX cool off, volatility might, come down, and then swing trading will, better opportunities with less volatility might be on the horizon. And then we'll take a look. The dollar, mentioned this bear flag yesterday, confirming lower from there. These correlations are always changing, but more times than not, a weak dollar is positive for equities. Gold resting after that strong day yesterday, still showing good RS, definitely a sector to continue to watch. Gold stocks, another higher high after that strong day yesterday. Silver, pretty much not quite an inside day, but tight consolidation day after yesterday's strength. Bitcoin, coming back, trying to get back above this 21. You had the 50-day right here that's down, that's sloping down a little bit, but just continues to hold this move off the lows. So maybe it builds a higher low or something of that nature. Total bonds just continues to trend, looking good. TLT, same thing, and with bonds looking good, yields are gonna be breaking down. 30-year breaking lower out of the bear flag, and the 10-year as well breaking out of a bear flag. So let's get into the tape. Some changes made here today. So news, we had a cool PPI this morning that prompted a pre-market gap up, little dip off the open and trend day. And then tomorrow we have CPI, which is another big economic report, along with jobless claims later this week. Were the S&Ps above the 100, 150, and 200 day. So we're moving Wednesday keys to want to see the S&P hold above the 21 day along with the Qs. The reaction to CPI is going to be important. And if these stocks that we're following, couple test buys, can they continue on strength? 3 days above the AEMA, 1 day above the 21. Expectations turning to neutral / positive, getting the green arrow here as well. And then let's see, sectors, tech, XLY, Bitcoin, software, mid caps, weakness. So yesterday you had strength in oil, today it was down, and that's sometimes nature of rotation. Everything weaves and bobs, and just one day doesn't make a trend. So obviously there was strength in oil yesterday, and now it's one of the weaker sectors, and that's going to be a lot of dependent on geopolitical news, if the war is escalating, etc. And so decent amount of changes in-house today. Some starters in Uber, home builder ETF, which is ITB, Kava, ONON, and then UPRO, which is the 3 times levered S&P product. And yeah, so let's get into some of those charts of interest and what we did today. So let's go over some of the buys. ITB, this is home builders. After it led here, and now it's pulling back, recaptured the 21 and 8. So maybe this resumes its trend. Overall, the names look pretty good. DHI, this chart looks good. Toll Brothers looks pretty similar. They report in 7 days. So as a group, that's strong. And when if IWM can get back into gear, these rate sensitive type sectors tend to outperform. Uber, big shake, positive reversal on earnings, and just really taking out this mini 2-day flag and holding above all the moving averages now. And this has been in a pretty big double bottom base. So maybe this writes itself as a new leader for the next market run if we have one. Kava, one we traded back from 60s to the 90s, but stepped aside as it broke the 50-day, but now it's starting to come out of this kind of double bottom base. Really strong day today, up 5%. And once it took out the August 9th highs, you can just see it had a really strong day. So you see this, it was consolidating around here for for the last 2 days after the strong day, and then, really strong close today and trending along with, the indexes and a lot of strong names today. Relative strength line is confirming as well there. ON. So this had a good earnings report today. Got punished pre-market. When I woke up in the morning, it was down around 6%, reverse positive off the open, and staged from low to high off that earnings was a 22% range. And as you can see, steep sell-off in the morning and then hard reversal. The earnings were pretty good. Sales were up, margins were slightly down. And the CEO had some positive comments to say about the business. And just a little side note is that, you see, if you go to the gym or you go outside, just if you look around, you'll see these shoes a lot more when you actually pay attention, because they're everywhere, really. And then, yeah, the S&P exposure, which we added, I covered the chart of the S&P earlier in the video. And then some charts of interest, some relative strength names. Upstart, this one continues to act well. Huge volume on earnings, up 10% today, clearing this, and this is still on watch for an entry. It's breaking out of a big weekly base here. And one thing to note is sometimes these big beaten down names can rewrite themselves. Carvana's a perfect example. This went from $400 all the way down to $3. But when you started to see that volume coming on the weekly set up, seeing a trough in earnings and a recoveries on the way, it can lead to a big move. And this stock has moved from $3 to $146 from the low. So a lot of strength there. And I'll just mention this while we're at it. This is one we've been watching for relative strength. Broke out of this tight area, super strong today, up 9% on the day. IoT, this is another one. This is breaking out of this mini flat cup and handle-ish base. And this one has been outperforming the market lately. XBI, this is another rate sensitive sector. ITB, which I mentioned earlier, but these led, and then they pulled back with the indexes, but now they're starting to turn back around, and this looks like a undercut of that previous breakout area and reclaim, and then still seeing good action in biotech related stocks. DoorDash, this is another one that had a strong earnings gap, breaking out of this mini consolidation. Volume a little lighter today, but this is another one that led initially off the October low and then spent a lot of this year in a base/downtrend, but earnings could be the catalyst for this thing to get moving again. Palantir, we own this one, reclaimed the 30 level again, and that backfill day was healthy because it did just move over 40% in a week. So strong, relatively strong day today, up 3.44%. And as long as this can hold above that 30 level, this one appears to be in good shape. NVIDIA, this led semiconductors today, up 6%, kind of clearing this downtrend line. And everyone was watching this 100 level, and a lot of fear came into the market when it broke it here this day on volume, but it quickly closed back above, back tested it, built a higher low, and now it's confirming higher. One thing to note is this 50-day is sloping down, so that's just something to take note. But this is really the best. This is obviously the TML, but if you look at the other semiconductor stocks, only a select few have held up as well. Avgo's one that I wanted to highlight. This one looks somewhat similar, but breaking this downtrend line-ish type thing and trying to get back above this 50-day. I'll pull up the stocks, and this still a bit in no man's land. Held the 200-day, built some higher lows. Now rubber meets the road here at the 21-day. And then some ones that have been torn apart. ARM was, killed in the sell-off, but maybe it's starting to come back around, held at 100 level. Micron, similar in this group, below the 200-day, rallying back up. AMD, which has just been a serial lagger as well. 50 days about to cross below the 200-day, They call that the death cross. And not that we put that much emphasis on it, but that is a trend signal that isn't great for stocks if they're trying to get rewrite the trend. And yeah, and then I mentioned software back above the 200-day strong multi-day push. We'll see Monday. A lot of upgrades on this one today. This put in a day two, a higher high after that earnings gap. Definitely one to watch. ServiceNow is another one on our radar. This is probably one of the best bases in the market right now. Continues to hold above this 800 level, building higher lows with great numbers. And yeah, a lot of it is going to be dependent on CPI tomorrow and how the market takes it. Some market related news. Starbucks, this was up on huge volume today. This was up 25% on 1,000% above average volume. And there was news this morning that the Chipotle CEO is going over to Starbucks, and he's a pretty successful CEO in the restaurant business. He has a fantastic track record, and as Starbucks has been struggling, maybe this brings some light back into their business, and gapped up huge and just trended all day with a strong close. So this is obviously a name you cannot ignore that volume. So one that we'll put back on the watch list to monitor. And then CMG, this gap down initially 10%, but rallied a bit today. So not the worst close, but clearly the market didn't take it well that their CEO is leaving the business. And Chipotle, we just go to a monthly chart. This has been a fantastic stock, and that former Chipotle CEO has done some great things with the company. So interesting news there. SE, this is C Limited, really strong earnings gap today, up 12% on 271% above average volume. And this is another case of kind of a old COVID 2021 darling name that had a steep pullback when, interest rates started to pick up. But this is trying to come out of a weekly base, some solid volume patterns down here. And today was really strong on volume. So worth a watch. And off the and this had a really strong run up earlier from 34 all the way up to 76. So that one's another one to keep an eye out. And it's really just good to track all the names that are gapping up on earnings on volume, because these, often can lead to some of the biggest moves. And just for example, where did this A&F move start? Well, it started all the way back here when it had a monster earnings report on monster volume, and look at 55 all the way to 200. So even if you're not going to buy it, keeping a ready watch list every earnings quarter of all these names can pay good dividends. Another one is ELF. This initial gap here, 223% earnings, and this led to a huge move. And then obviously notable ones like SMCI, earnings breakaway gaps. And that's why we always harp on pay attention to the earnings volume, because a stock needs volume to move. And then another thing is the N in CANSOM, right? You want a reason for something to move, and that can be a wide variety of things. It could be a new product like Kava, that's a new restaurant, that's something new. Or it could be a stellar earnings report, a new theme, a new popular thing in your day-to-day life. So that's a little rant on why we are always keeping track of all these earnings. So overall, strong action across the board today. We are getting into, day 7 off the lows. So always being cautious, but feedback from new buys has been pretty good. And some scenarios to think about is, if CPI is good, the market takes it well, the market could just gap right through this 50-day up into this 5,500. Or if, negative reaction off the open, we have weakness, comes back in, builds a higher low, that could be a buying opportunity. So just always being ready with a couple different scenarios to think about. And obviously some more news later this week with jobless claims. And yeah, so that is going to wrap it. As always, like to hear from you. My email is connor@revereasset.com, and you can always reach out to Dan or don@revereasset.com. The phone is 855-REAL-WEALTH. That is 855-732-5932. And if you're interested in becoming a client, please reach out. And with that, I'll wrap it for Tuesday, August 13th. This is Connor Bates with Revere Asset Management, telling it like it is. Thanks for listening and good luck tomorrow.